Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good afternoon. Thank you for making time on this Monday.
Happy to be here.
Well, last week stocks on Wall Street had their best week since 2020, despite the Fed going ahead with its rate hikes and quantitative tightening. The Dow up 5.5%, the S&P more than 6%, and the Nasdaq more than 8%. What's the story in the global markets as we start a new week?
Okay, well, the numbers that you mentioned for the were a week for the whole, and just Friday alone, Dow went up by 0.8%, S&P by 1.7%, and Nasdaq by 2%. And it was the best week of the year, despite, or perhaps because of the Fed's rate increase. There has been some mysterious bout of optimism that's taken place in the last week, or perhaps it's because there's still too much liquidity in the global financial market, and all that money has to go someplace. It went to the oil, it went to commodities. Now maybe it's coming back to stock, at least until the central banks start absorbing a lot of that excess liquidity. But still, a lot of the analysts are saying that the anticipation of the interest rate hike did more damage than the interest rate hike itself. Perhaps the strange optimism that we saw after the rate increase, though, is falling a little bit because the stock futures for Monday before opening is falling rather than rising. Now, why did it go up so much last week? I said was perhaps unexplained optimism, but there were some hints that the market was looking at to justify their optimism. The Ukrainian-Russian peace talks seem to be going well. There was some speculation that Beijing, because they have been, their economy has been slowing down and some of their cities went into a lockdown, perhaps they'll take stimulus measures, and then perhaps the OPEC will increase the supply of oil. That caused the oil prices to fall during the middle of last week. Though it's rising again, it isn't at the high levels that we saw at the beginning of the last week. Somewhat disappointingly, Beijing did not decide to lower interest rates today, but still, the speculation that perhaps it would have gone up may have fueled at least some of the optimism that we saw in the stock market last week. And also for the last week, the strength took place. The high increases in stock prices in the U.S. took place in consumer discretionary stocks, tech stocks, and airline stocks, and energy was down probably because the oil prices fell during the middle of the week. European stocks on Friday, DAX, CAC, and FTSE were all up between 0.1 and 0.3%. They completely erased the losses that they took from the Ukraine invasion, so they're still down for the year. The Asian markets, there were an anticipation of stimulus by Beijing, and the Asian stocks were up last week, but today the results were mixed. Nikkei rose by 0.6% today. Shanghai and Hang Seng, they haven't finished trading yet, but Shanghai is around level and Hang Seng fell.
Well, today, Korean stocks started the week lower. Foreign investors were major net sellers again, while retail was buying, so the KOSPI and the KOSDAQ both with moderate declines. Tell us about the domestic market.
Okay, well, it seemed like a bit of a disappointment that China did not lower their exchange rate, lower their interest rate, did affect the Korean market as well. KOSPI was down 0.77%, and it ended today at 2,686.05. Individuals bought, institutions and foreigners sold. Year to date, it's down by 10%. KOSDAQ was down 0.5% today. It ended today at 918.4. Individuals and institutions bought and foreigners again sold. Year to date, they're down 11.5%.
Well, now, Professor, data show that Korea's exports continue to grow. In the first 20 days of this month, they were up more than 10% from a year earlier. Setting aside the number of working days in the month, there was growth in semiconductors, petroleum products, some other major sectors. On the other hand, car and car parts were down. We see an opposite trend in the import numbers, though, Professor. What do you make of the situation?
Okay, for the first 20 days of March, exports recorded $37.3 billion. As you stated, that's up 10.1% from March last year. Imports, they're $39.3 billion, and they're up 18.9% compared to March last year. Now, for the year so far, from January to March 20th, exports are $146.6 billion, up 15.8%. Imports are $152.6 billion, up 27.2%. So sadly, for the month of March, up to the March 20th, we have a trade deficit of $20.7 billion, and for the January to March 20th, we have a deficit as well. But note that if we look at the month of February, for the first 20 days, Korea also had a trade deficit in February for the first 20 days, but that turned to a slight surplus at the end. So there still is a chance that Korea will record a monthly trade surplus. The big increases came, as you mentioned, in semiconductors, whose value of exports went up by 31%, petroleum products by 79%, computer peripherals 64%, and home electronics by 63%. Automobile and auto parts exports fell, but that has been a common event in the last few months, and that's not particularly because the global demand is declining, but there's not enough parts, especially semiconductors for automobiles, so that is affecting production, which is affecting exports. Now, as for the higher value of exports itself, that is probably due to global inflation and rise in prices rather than increase in volume. We do not have the numbers yet available for March, but if you look at the February numbers, even though exports value went up by more than 20%, volume only rose by 3.7%. The rest of it is price rise due to the global inflation, especially in the area of petrochemicals and petroleum products, whose prices have gone up along with the oil prices. Imports, again, if you look at February, the numbers went up, value went up by 25%. But actually, the volume of imports fell by 0.4%. So again, a lot of that is because of the global inflation, especially with oil. I believe that this is what's happening in March as well, but we will not have the numbers to back it up until the final figures come in at the end of March.
Ryan, we'll have to check back in with you, Professor, when the full picture comes out at the end of the month. We'll have to leave it there for today, though. Thank you, Professor, as always, for sharing your insights with us.
Thank you.